What's up guys, and welcome to the channel. In today's video, I'm going to be going over my February 2023 dividend income where I received 16 paychecks. But right before we get in that, you can see that my portfolio is once again under $50,000. I just can't keep it above the 50K range. But I'm currently sitting at $49,369. And we're looking at the overall performance of my portfolio. I'm down $148.25. However, in a little over 3 years, almost 3.5 years, I've earned $4,601.90 in dividends. Now let's go check out the month of February. So on February 1st, I received two dividends, $7.64 from General Mills and then $15.24 from Verizon. This puts me at $22.88 to start the month. And as you can see, I have $1,125.71 in General Mills. Don't look at the return overall because this is based off of January 25th, 2023. That's when I updated my M1 Finance portfolio and created my separate pie for individual stocks. And it just decided to wipe out all of my past data, which really sucks. However, I have 14.14 shares and I have an average share price of $58.64. And one other note, it also got rid of all the dividends I've earned for General Mills, which I've owned this stock for quite some time. So that really sucks how it got rid of literally everything. But looking at it, the PE ratio of 16.4 and a decent dividend at 2.68%. Now let's look at Verizon. I have $893.45 for 23.35 shares and an average price of $58.06. And this stock has a huge dividend yield at 6.76%. And just like I was worried with AT&T and they cut their dividend, I'm kind of feeling worried about Verizon. And I'm not sure if they're going to be able to maintain their dividend, but we will see what happens whenever it happens because who knows. Next up, on February 6th, I received a dividend from Jeffy of $27.93, and this is quite a drop. I want to say the dividend was a lot higher last time, like maybe even in the mid 30s, maybe 36, $37 last time. But that just goes with Jeffy, the ETF. It's a lot safer right now because they own a lot more of their individual stocks instead of the ELNs. And as the market rises, Jeffy doesn't perform as well. Jeffy's a lot better when the market is in a bear market. And so with that being said, I'm currently at $50.81 for the month. As you can see with Jeffy, I have $3,399.85. Now this one did keep its data because it stayed in the same pie. So I've lost $323.82. However, I've earned $365.56 in dividends. I own 62.92 shares at an average price of $59.18. And it says the current dividend yield is at 11.8%. So that's actually really high for Jeffy. I think when I bought it, it was only around 7 or 8%. Now moving on to the next stock, on February 8th, I received my first dividend from Lowe's, $1.23, and that puts me at $52.04 for the month. And this is my actual return for Lowe's because I'm pretty sure I bought it when I had this pie. But I have $447.66 for 2.24 shares at an average price of $200.19. And it's got a decent dividend yield at 1.98%. Now, I really wish I would have bought Lowe's a couple, like 2 to 3 years before, because they've had several like 30% dividend increases. So I hope to put more money into Lowe's and to get those amazing dividend increases of 30% plus. But now on the 10th I received a dividend from Clorox of $5.08. So as you can see, I have $671.31 in Clorox for 4.3 shares at an average price of $167.30. And then I do like the dividend yield, currently sitting just above 3%. And then next up, on February 14th, I received $3.57 from Colgate, and that puts me, oh, and I received $9.09 from Texas Instruments, and that puts me at $69.78 for halfway through the month. And as you can see, I have $562.15 in Colgate for 7.6 shares at an average price of $75.10, and it has a decent yield at 2.54%. However, that PE ratio is really high at $34.60. So I probably would not buy Colgate at this price. Then looking at Texas Instruments, I have $1,288.34. I have 7.33 shares at an average price of $162.28. And it's got a decent dividend yield at 2.72%. And it's got a great PE ratio under 20. So I'd say it's a little undervalued at that 18.5 range. February 15th, I received 6 dividends. My first from Abbott Labs at 72 cents. And then $5.66 from Hormel. $5.82 from Procter & Gamble. $9.32 from O. $6.98 from Stag, and then $17.23 from AbbVie, and that puts me at $115.51 for the month. So looking at Realty Income first, I have $2,419.99 for 37.52 shares at an average price of $63.49, and it's got a great dividend yield at 4.6%. The next up is Stag at $1,948.36 for 56.95 shares at an average price of $31.83. And it's got a good dividend yield at 4.27%. So next up is Abbott Labs. I have $356.10 for 3.4 shares at an average price of $107.92. And then it has a lower dividend yield at 1.84%. Then next up, I have Hormel Foods at $835.71 for 20.56 shares at an average price of $47.49 and a decent yield of 2.6%. And then next up, I have AbbVie at $1,816.84 with 11.64 shares at an average price of $93.70 and a great dividend yield of 3.66%. All right, and next up, on February 16th, I received my final dividend from Apple of $1.40 to put me at $116.91. And I will go over that in a later video of why I got rid of Apple. But next up, on the 17th, I received $2.42 from Costco, and that puts me at $119.33 for the month. And I have $1,276.33 in Costco for 2.68 shares, and their dividend yield is pretty low at 0.76%, and I have an average share price of $401.11. However, the nice thing about Costco is they have a 12% 5-year dividend growth CAGR. So even though their dividend yield is low, they increase their dividend by a great amount every single year. And to end the month, on February 28th, I received $25.01 from BST, and that puts me at $144.34 for the month of February. And I have $3,239.18 in BST for 100 shares at an average price of $35.22, and they have a dividend yield of 9.26%. Now let's look at my dividend growth chart. As you can see, for February, I have the $144.34. Now, if you take that and divide it by 160, say I worked 160 hours in the month, I would have made 90 cents an hour. So definitely not enough money to live off of. And then if you take my dividend income and divide it by my expenses, which in the month of February were $1,444.62, you will get 9.99%, which represents how much of my February dividends would have paid for my expenses. So almost 10%. February kind of sucked because my wife's car had a cylinder misfire, and I ended up just buying 3 new cylinders for her, and that cost a lot of money. So that's why I couldn't reach the 10% in February. And so far for the year, I've earned $344.30. And when you divide that by 12, it equals $28.69 a month. But of course, we got plenty more dividends to earn for the rest of the year. So guys, thank you for watching the video. Don't forget to like and subscribe.